Contrary to popular belief, it's actually much easier to get started in real estate investing than you may think. I know for me, one of the big obstacles was like, I don't have a lot of capital, a lot of knowledge, but by the end of this video, I'm gonna show you and give you a couple of reasons why it's actually easy to get started in real estate investing and why you can get started on your journey just like I did several years ago. So one of the myths or one of the things that kind of stopped me from getting started in real estate investing was capital, right? I didn't have a lot of capital, and you may be watching this video and you may be just like I was several years ago with not a lot of access to capital. I wasn't a trust fund baby. I just didn't have a lot of money to get started in real estate investing. But what I quickly learned is that what is more important than the capital usually is finding a good deal and finding a good opportunity. So I'm gonna share with you guys how I got started in real estate investing in 2018, right? So in 2018, the first way that I got started investing in real estate was real estate wholesaling, which is basically finding good off-market deals and finding other investors that were willing to buy those opportunities. But one of the examples that I like to give to a lot of folks is if you were to just pull up to your local bank and say, hey, you know what, I just went through a short training, I went to a presentation, and I learned about stock trading. I think I can knock it out of the park and do really well with stock trading. Can you loan me $100,000? They're gonna probably look at you and say, I'm sorry, we can't loan you $100,000 because there's no collateral, right? You don't have a lot of experience. And if you go back to them and say, hey, you know what? I mean, I got a little bit more training and I wanna do Forex trading. Well, they're gonna look at you again and say, I'm sorry, we can't loan you money so you can invest in Forex because you can lose that money in the matter of a day, and there's no way that we can get that money back because there's no collateral, once again. But if you were to go to that bank and pull up and say, Mr. and Mrs. Banker, I have a great opportunity to buy a property in my local neighborhood and I need $100,000 to be able to purchase this property. However, once this property is finished, I know this property is going to be worth $250,000. They're going to be looking at you and saying, sure, we'd love to look at that opportunity. We actually do a lot of transactions and a lot of loans for people just like you that are real estate investors. Why? Because we are happy to be able to secure that investment with the collateral of real estate. And that's one of the things that I quickly learned when I got started in real estate investing is that banks and a lot of people are actually willing to loan you money just like they're able to loan me money, because they know that if something were to happen to myself or something were to go wrong in that transaction, they're able to secure their funds by the collateral of real estate as an asset, right? That's one of the most important things. Growing up, right? Sometimes you may have got a phone call from your cousin, your brother, and sometimes, you know, they're just wanting, you know, some funds for whatever emergencies or situations, right? But the thing is that whenever we're loaning money, typically to friends and family, it's not secured by anything. And that's why I like to tell people the best thing to do is if you're going to loan people money, write it off as a donation to your friends and family, because you may or may not get that money back. But whenever you are in business and in real estate for that matter, your funds are always going to be secured by collateral, which is a real estate asset. The best and most important thing is being able to recognize a great opportunity. And how are you able to recognize a great opportunity, right? So I encourage for you guys to keep watching some of my videos. Maybe go to a local meetup. There's thousands of what's called RIAs across the United States. What that stands for is Real Estate Investment Association. And there's a lot of free classes, and they're basically educating people on how they can recognize and maybe start doing some of the underwriting, right? Which is being able to recognize those deals, which is number one, starting out by finding out what the true aftermarket value of that property is, right? So if I were to make this house nice and pretty and I was able to put it on the retail market with a real estate agent, what is the most that I can sell this property for, right? So that's gonna be the first thing that you're gonna have to start figuring that out. There's a lot of courses that you can take on you know, going through that, or if you have a good friend that has been a real estate agent for some time and they're able to pull what's called comparables to be able to find out what comparable properties are selling for in that neighborhood. That gives you your starting point, right? The after repair value. And then you're gonna wanna find out, obviously, what is it gonna take to renovate that property and get it to that standard. And then from there, you obviously are gonna put some fees. You're gonna have to calculate, there's going to be some realtor fees whenever you sell that property. If you're going to turn around and fix and flip and sell it, there's also going to be some holding costs, right? There's going to be insurance for that property that you're going to have to purchase typically for 6 to 12 months. There's also real estate taxes that you have to account for that you're going to have to be paying from day one of being able to buy that property, right? So once you figure out the after repair value, you figure out the renovations, you figure out the holding costs, you figure out all these other costs, then from there you're gonna want to have a good size margin. And just the kind of rule of thumb that's kind of out there and a lot of people like to follow is you don't want to be no more than 70% of the after repair value, especially if you're brand new. 70% of the after repair value minus repairs is the number that you want to pay for that particular property. And typically that is a safe number that you have a 30% margin to be able to make for profit, or any maybe mistakes or things that happen in the course of renovating a property, which can be unforeseen expenses, contractors maybe not doing the right thing, or not doing a great job. So those are just some of the things that you're going to be learning when you get started in your real estate journey. But I encourage you guys to start learning about really recognizing great opportunities. And how do you start doing that? By going to local meetups, by tuning into channels like myself and other ones out there that are providing that information for you guys, to making sure that that you guys get a lot of value and really understanding the market, because the market, more than ever before, we know that it's shifting. There is a little uncertainty in the market, but we are still buying fix and flip opportunities. We're still buying investment properties, because the one thing that we know that is always going to be true, if you're able to buy and recognize an opportunity and being able to buy it at 50% of the actual value, it's going to be very hard to lose on that particular asset, right? So one of the biggest questions is, where do I get funded? Who is going to fund my deal? So I'm going to be talking about several examples for you guys where you're going to be looking for people or companies to be able to fund your next real estate investment, right? So the first and foremost is, a lot of you guys know, is banks, right? Banks actually like to fund real estate investment opportunities, right? I kind of prefer some of the local community banks. They're going to be a little bit more friendly when it comes to being able to build that relationship with you and understanding real estate investments. I would stay away from some of the bigger banks, Chase, Wells Fargo, some of those banks. They may help you, but I like and prefer local community banks. Whenever you're going to a local community bank, they will ask you for a few things. And typically they are going to want anywhere from 10 to 20% down when you're buying a real estate investment opportunity. And they do have favorable terms. What are some of the pros and cons on being able to use a bank for your real estate transactions? The pros is that the actual interest rates and the cost of being able to acquire capital to buy your real estate investment is typically, they're going to be a little bit lower. The cons are, they are going to ask for a little bit more things as opposed to some of the other options that I'm going to be talking about, right? Some of those things maybe they are probably going to want maybe some tax returns. They're going to want some bank statements. They are going to want maybe some experience and maybe kind of a plan, budget, some a little bit more detailed things whenever you go into a bank. And the other con is they typically take a little bit longer because, number one, they are going to send an appraiser typically out there to actually appraise the property. So that's a con because you do have to wait. And as you guys know, some of the ways that we've been able to get some of the best properties is people need to sell their property fairly fast, typically in a matter of a week or 2 weeks. And whenever you're going to a bank, it may take actually 30 days to sometimes even 45 days to be able to close that real estate transaction. So some of the cons of going to your local bank, but I would recommend just go to your local bank and ask, who's in charge of real estate investments? Who's a banker? Who can I speak to here at the bank that will be able to tell me what kind of programs you guys have for real estate investors like myself? And then just go ahead and have that conversation. It's not going to cost you anything, and you're going to be able to ask them several questions and maybe answer some questions that you may have, right? So that's a great thing, is go to your local bank. Number two is what's called hard money loan, right? A hard money loan is actually fairly easy. It's not really hard. But what happens is they're actually going to be probably the one that you're going to pay the most for your money, right? So the pro for a hard money loan is that you're going to be able to close quickly with the hard money lender, and they're going to require the least amount of things compared to a bank, right? They are going to obviously do their own due diligence depending on the hard money lender, more times than not, they're gonna do their under basically in-house appraiser and just kind of pull comps. They necessarily won't send an appraiser out there. There may be a few that will actually send an appraiser, but typically they're able to give you kind of an answer in that day or by the next day. They're with photos, with the address. Typically that's enough information where they can pull their numbers and say, okay, we can loan you X amount on this particular property. The one benefit of a hard money lender is sometimes if you're in, if you're needing to close in 1 week, more times than not, the hard money lender, especially if you talked to them previously and they already have some of the information, like, obviously they will typically pull your credit. Some hard money lenders won't pull your credit, but typically they will do a softer hard pull on your credit. So if they have some of those things, they're able to close fairly quickly. I mean, we've closed some properties in just a matter of 3 or 4 days with some of these hard money lenders. So that is the benefit of being able to get funding from a hard money lender, is you can close fairly quickly. But some of the cons is you're gonna have to pay a little bit more in fees, right? So being able to go to a local bank, you may be able to get a 8 to 10% interest rate on your 6 to 12 month loan to renovate that property. And when you're going to hard money lenders, typically those are going to start anywhere from 10 and go up, and it can be anywhere from 12, 13, 14% for a hard money lender. And they're also going to charge what's called points, and some of those points can be basically 1, 2, 3, or 4% of the actual loan amount, right? They're also going to charge you for whenever they disperse money for renovations. So hard money lender benefit is fairly quick. There's so many in your local area. All you got to do is talk to local investors, RIAs, realtors. They're gonna be able to help you find those sources, or even just Google hard money lender in my area, in my city, whatever that city is, and you're able to find them, call them, get on the phone. They're easy to find, easy to get capital, but they're typically cost the most money. The third option for funding your real estate transaction is actually what's called a private lender, right? And that's exactly what it is. It's private. It's typically people that are not announcing themselves. Hey, I do loans and whatnot. It's really building relationships. And some of those private lenders could be friends or family. Somebody that you may know that may have a retirement or IRA or a retirement account that they may just be sitting there with $50,000, $100,000. And sometimes you can actually get funds from several of those IRAs to help fund your one deal. The benefit of private capital is they're really a lot easier to work with, right? Especially if it's somebody that you've built a relationship with, that trusts you, likes you. They're gonna wanna do business with you, and they'd rather, instead of getting 2, 3, 4% at the local bank, they'd rather get above average returns, sometimes double whatever that number is, and let you use that capital to be able to secure your real estate fund. So the benefit is it's very easy. Typically they are able to fund your transaction within a few days if they're running their underwriter, or if you kind of have a collateral file with all the good details, right? What's the after repair value? What's my strategy? What am I going to do to renovate this property? What do the numbers look like? So if you have a good summary, present it to them. They're able to fund your deal within a matter of the same thing, 1, 2, 3 days. And you're going to pay typically less for a private lender. And they're very happy because they're getting a lot more than they are getting at their local bank. And you're happy because you're paying less than you are from a hard money lender and typically a local bank. So you can start building those relationships. And I'm going to be doing a separate video talking about how you can raise private capital for your real estate investment. If you like this video, I encourage you, go ahead and like the video, share the video with somebody that may find value in this video. And I have some resources for you guys. I have a website for those of you guys that want to connect with me, want to learn more. I have a website, notesinvesting.com. I'm going to go ahead and put some links to some of those websites and resources. I do read the comments and I will reply to your comments. So if you have a question, go ahead and put it in the comments. I'll make sure to answer fairly quickly and connect with you, right? So I encourage you guys, make sure you follow me if you haven't already. Subscribe. I am going to be making sure that I provide value and have consistent content for you guys on a weekly basis. So I'll catch you guys on the next video. Thank you.